You work an entire year, and nearly a third of it disappears before you ever touch it. 24% goes to federal taxes, 5% goes to state taxes. That's 29% of your income gone. 29% of a year is 106 days. Let that sink in. That means every single year you work 106 days for free. No ownership, no equity, no choice, just obligation. If you're exhausted, stressed, and wondering why working harder never seems to move the needle, listen closely, because this isn't an accident. They tax you when you earn your money. They tax you when you spend it. They tax you when you save it. They tax you when you own anything of value. And if you don't plan ahead, they'll tax what's left when you die. We've been conditioned to believe this is normal, that this is just the cost of being a good citizen. But here's what almost no one is taught in school, at work, or even by their parents. The tax code isn't neutral. It's not random. It's a rule book. And like every rule book, it rewards some behaviors and punishes others. The good news? There are 6 completely legal strategies that can dramatically reduce how much of your life you give away each year. Not loopholes, not shady tactics, just strategies most people were never shown. Strategy 1, tax-advantaged investing. This is the low-hanging fruit that millions of people ignore. Start with your 401k, at least up to the employer match. That's not investing. That's free money. Next, max your health savings account, $4,300 per year. It's one of the most powerful tax tools available. Tax deductible going in, tax-free growth, tax-free withdrawals for medical expenses. Then max your Roth IRA, $7,000 per year. Pay taxes once and never again. Finally, max your 401k, $23,500 per year. On a $100,000 salary, doing this correctly can save over $6,000 in taxes every year, while potentially compounding into $2.4 million over 25 years. That's not luck, that's math. Strategy 2, entity setup. This is where the game changes. If you can shift part of your income from W-2 to 1099 or LLC income, the rules flip in your favor. Now you can legally deduct the technology and tools you use to earn money, a portion of your home as a home office, business travel, professional education and training, and any reasonable expense tied to income generation. Employees get taxed first and hope for leftovers. Businesses structure first, then pay tax on what remains. Same money, different rules. Strategy 3, real estate syndications. Real estate has always been a tax favorite. With syndications, you get the upside, consistent cash flow, outsized returns, bonus depreciation that can offset other income. Without the headaches, no tenants calling you at midnight, no maintenance, no active management. This is how many high earners reduce taxes while building long-term wealth quietly. Strategy 4, the backdoor Roth. Make too much to qualify for a Roth IRA? That's not the end of the road. Contribute to a traditional IRA. Convert it to a Roth IRA. Repeat every year. Income limits don't apply to conversions. It's one of the most misunderstood and most powerful strategies available. Strategy 5, the mega backdoor Roth. If your 401k plan allows after-tax contributions, this is a game changer. Max your standard 401k. Add after-tax contributions. Convert everything into Roth. That's up to $70,000 per year, growing completely tax-free. Most people don't even know this exists. And here's the key takeaway, the part that ties everything together. All of these strategies have one thing in common. They only work when you control how money flows to you. W-2 income is taxed immediately, before you ever see it. Business and investment income gets structured first, then taxed. That difference is everything. The system isn't broken. It's doing exactly what it was designed to do. It doesn't reward employees. It rewards builders, owners, planners. And the moment you understand that, the moment you learn how to position yourself on the right side of the rules, you stop working 106 days a year for free and you start working for yourself again.